There are so many different ways to skin the cat in storage, but you got to get in it. And that's why I say self-storage may be what brought you into it, but you'll find your niche within it. And you might do multiple things. We've got storage facilities that are IOS, boat and RV, and storage all in one.
Guys, welcome to the Practical Wealth Show. So most people think of self-storage as just a row of metal doors. But what if I told you it's one of the most recession-proof, cash flow rich investments out there? Today on the Practical Wealth Show, I'm joined by Joe Downs, co-founder of the Belrose Group, a guy who's mastered the art of finding the niches in the niches within the riches, right? And to build serious wealth in the self-storage game. So whether you're a seasoned investor or just looking for your next passive income play, Joe's going to break down how to start small, scale fast, and unlock the hidden potential in an industry most people overlook. Let's get into it. Joe, welcome to the show.
Curtis, so nice to be here. Thanks for having me.
Nice to meet you. It's fun out that we're literally
could have done this in person.
Yeah, right. We could have like going to the Starbucks up or something done in person. But yeah, so it's like welcome to the show. Tell him, Joe, what I didn't tell him. How did you kind of, you had a couple of careers before you got here. So give him a little background and framework, and that would led you into this industry.
Yeah, I'm happy to, but I'm going to relate it to some of the things you and I talked pre-show, if that's all right. So, yeah, I've done many different things and had to reinvent, mostly because I guess I was born a serial entrepreneur. But some entrepreneurs are they're going from challenge to challenge or opportunity to opportunity because of great success. Mine was actually born out of like the industry change, or you're having great success, and then the industry fell out from underneath you. So I've been more of the hungry dog reinventor.
Okay. Right.
had to keep after it really. But it's been a fun and really interesting ride, if you will. But related back to what we talked about pre-show, you and I didn't get a chance to tell you this, we think 100% alike. Okay. I have friends who have gone off and done very well at Wall Street or whatever, and they've created millions of dollars in assets for themselves, illiquid, non-cash flowing assets.
Right.
And I had preached to them, and they were here, and I was always here.
Right.
And if you're listening, they were way ahead of me in terms of net worth, right? But I was building cash flow.
Right.
So I was always after. I wish I could remember why I learned a lot. Maybe just being young and broke. Maybe that's what taught me a lesson. Cash flow is everything.
Right. That'll do it, right?
They will do it. But I also think I read a book, and I wish I could remember what inspired me a long time ago to head in the direction. And I wish I'd met someone like you a long time ago too, because I am familiar with infinite banking, but I didn't start it years ago like I wish I did. So, but it was the cash flow. It spoke to me. It said, if you have cash flow and you can live within that cash flow or better below it, you have the ultimate freedom, the ultimate financial freedom. So
was it Kiyosaki? One of the Rich Dad Poor Dad, or
I mean, I read it, so maybe that was
part. I heard that it was through Robert Allen, Creating Wealth.
I've read them both.
Okay,
so I just don't know who to give the credit to, or maybe it's split equally. And I think there's two more of it, right? So whatever inspired me, I don't recall, and it might have just been an amalgamation of hey, I keep hearing this same theme. Yeah. This makes more sense, combined with being poor and struggling to pay your bills, living that message, right? So I have always set out to, no matter what I did, to try to build cash flow. So I'm in the storage world right now for two reasons. One, because I had to reinvent, because my other business that I still have, and I didn't at the time. Didn't make it to a successful cash flow position. We were still building it.
Mm-hmm.
And that's a distressed debt business. We buy distressed debt. I had to reinvent while I still had that company, but we didn't let it go. We just put it on the back burner and realized it was more of a hobby than a company we could control the outcome of. And so that's when I made my foray into to storage. Actually, sorry, really, I started to do other things for cash flow, like hard money lending, whatever. And then as I started to learn about storage, my distressed debt business came back with opportunities. I won't get into what happened, but within 3 years we couldn't buy anything. And when we finally could again, the way we used to operate that business with investors was we had to buy and sell. We weren't building cash flow, which is what I always wanted to do. When we came back the second time, we did it without investors, or we did it with some investors, but we convinced these investors this is a cash flow game. We are giving away the assets if we're selling them. We're giving away future cash flow streams if we sell them.
Yeah.
And we proved to them it was worth more. And since that time, do we sell assets or loans? Sure, we do. But I have built up enough cash flow that in that business that allows me to do really anything right now. I don't even have to work because I have enough cash flow coming in that covers my net. Now, I've got 3 kids. You know how that goes. So if I want to live a certain lifestyle, you said you were in Hawaii recently. We're planning on going to Hawaii. You want to start to live, you want to increase your lifestyle, you need more cash flow, right? Or at least I do where I am. So, and by the way, a lot of people talk about the word retire, and you and I aren't. I'm 51. I'm not really near the classical retirement age, regardless. I don't know what the word means. It meant something to a different generation than it does to me.
Right.
To me, I just want to be free to do what I want. Age is irrelevant. And I can do that if I have cash flow. And storage is also another way to generate cash flow through real estate. So is multifamily. I mean, there's any number of ways to do it through real estate. What I like about storage is, and I've invested in multifamily, I've raised money for multifamily, also office and retail and hospitality. What I love about storage is it shares a lot of those same similarities. It's real estate. You get all the tax benefits, depreciation, right? But it's a little bit different. And what really turned me onto it is it's a lot of the advantages without some of the headaches. Almost the best of both worlds. And for me, having experience raising money for, not operating, but raising money for hotels, multifamily, storage sits in between them. So hotels, you're a nightly business. You are an operating machine because you have nightly contracts. Right. Multifamily, you have annual contracts, right? Or leases. Storage, we operate monthly. So it's not so intense like a hotel. Right. But we're also not, we're not, if we need to pivot or turn, it's not turning a cruise ship. Right. We're more like a PT cruiser, right?
Why do you think most investors overlook self-storage?
I appreciate why you asked the question that way. I don't know if they're overlooking it as much as they haven't been exposed to it.
Okay. That's fair. I think that's it, because I seen it, but I hadn't seen how to do it. Like, they don't have workshops on it, or that kind of stuff. So
it's funny. I'll touch on that in a second. I didn't know what self-storage was 10 years ago. I used to go to 20 years ago. I didn't know what self-storage was. I mean, we've all driven by and seen orange doors. Right? And there are orange doors on a lot of garage looking doors in a row, whatever that means, whatever that is. I've never needed it, never had the desire to find out what it was for my personal use. And even 20 years ago, I was going to commercial real estate conferences in Vegas, multiple times a year. Every commercial real estate sponsor you can think of in every asset class except self-storage. So I had no exposure to it professionally or personally. Self-storage, it's been around since the early 80s, but we weren't, as an industry, even really tracking data until like 2000. So when they measure, when we talk self-storage stats and supply indexes and, dollar per square foot, national averages, we can only go back to really 2000. It's only 25 years of data.
Wow.
Multifamily, you got 100 years of data, right? It's compared to a lot of other asset classes, it's really a puppy. And with that comes the courses or the teacher. You mentioned who's teaching it, or you go to. And by the way, I used to go to a lot of alternative investment conferences where I spoke at them about distressed debt.
Right.
And you had hard money lenders and debt guys and rehabbers and this guy and that guy. No one in self-storage. No one anywhere. Right. And if they were, it was one guy and nobody paid attention to him until not until me, but I started to pay attention to him when I needed to.
Right.
And I got an email at a time where I was down because my distressed debt business was floundering because I couldn't buy any more debt because of the regulations. And then this email came in my inbox and spoke to me. And that came from Scott Myers. He's the first guy in the country to teach self-storage, teach people how to do it. He's actually been doing it for like 18 years now.
Wow. Okay.
Now, in the last 5 years, there's probably 5 more that are teaching it.
So
3 of which are former students of his.
Oh, okay. Are you acquiring, teaching, or a little bit of both? I just want to know where.
So Joe Downs and Belrose.
Yeah.
I was invited back to present at Scott's Academy that I went through myself to learn how to buy self-storage.
Mm-hmm.
That started 2 years ago. And as of February of this year, my company took over the entire mentorship program. So we not only create the content, we teach it, and we mentor. We have an education part of our business. It's really the fulfillment, the mentoring, the coaching part of the Scott Myers Academy. We are constantly looking for value add mom and pop self-storage facilities that are existing and operating. And I say value add, meaning we're looking at the way they're operated and saying, hey, there's an opportunity to increase the value of this from an operational standpoint. Sometimes from an expansion standpoint as well. We've done that. But a lot of times it's just the operation. And then we're also developing. So we started to develop. So in the intro, you talked about niches. I always tell people now at the Academy, and we also have a mastermind on a podcast or whether I'm talking to a student, storage is what brought you here into this little world of ours, this little circle. But there's so many derivatives of it. It's fun and exciting. So you have self-storage is what brings most people in. But then underneath that label, you've got boat and RV storage, pro storage, which is a term we coined because there were like 5 different names for the same thing, which is just B2B storage. So if self-storage is B2C, business to consumer, pro storage is business to business. So we're building pro storage facilities for business owners, and they're much bigger units. So, the 2-bedroom apartment of self-storage is the 10 by 10. That's the most common unit size. It's 100 square feet. That's the most common unit size across the country. It's the most rented. It's the most common because it's the most needed and rented and whatever, right? Well, that's 100 square feet. In the self-storage facility, if we get rural, we have some units that are 200, 300 square feet, right? Maybe 400. I doubt it. In a self-storage facility. Pro storage facilities, the smallest unit size is 500 square feet or 400 something, up to 1,000 square feet. The ceiling heights are 14 feet. In a self-storage facility, they're 8 feet. So you can drive a truck into it with ladders on top, or an RV, or anything on a trailer. So
I just heard this somewhere, like where somebody got a thing and then chopped it up and created what you were talking about.
Yeah. So that's small bay flex, maybe.
Okay.
It's very similar to pro storage. The difference there is they might put the flex part. They might put an office in there. So it might have 1,000 square foot unit, 200 square feet of office, 800 square feet of.
Because you think of the AVHC or roofer, they got to store that trucks and that stuff somewhere secure.
Yeah, the inventory, equipment, you name it. So HVAC guys, right? Plumbers, electricians. Sure. The difference between small bay flex and pro storage is, do you want to work there? Because that's a different use code, right?
Okay.
So the cost,
like you can have your office there stored with that. So we say work there, you could, okay.
Yep.
Yep.
Yeah, it's like a mullet, right? It's the party up front and business in the back.
Okay.
Right? We've all seen them. You've all been
Right.
in them. If
Right.
you've gone to pick out granite or met with a window company, maybe you've been in the storefront office, and behind it is the
Well,
warehouse.
now, so who should be, now I'm excited, right? Because I'm always thinking about what I like. I want cash flow, like, to your point with your Wall Street guy, because they'll say, oh, I got 29. Somebody had a client tell me, I got 29% on my IRA last year.
Mm-hmm.
Why should I put money in this insurance policy? It's not either or, it's both. But what does that mean? Because the markets go up, they go down, and it's worth whatever the NAV is at 3 o'clock at the end of the day. That's what your investments were, right? And so that's an illusion because it goes up or down. And you can't, again, I always say you can't eat equity, right? So you've got to decide kind of what you want to be when you grow up. Because I don't like retirement. Here's the original retirement of what I was told. Is an agricultural term. It means to put out of use, to withdraw, to put out of use. And so we want, or close to your definition, you can do what you want to do instead of what you have to, or it's a capacity that generates cash flow. So I'm looking at, if I'm let's say I'm a business owner, I'm a real estate investor, I'm just starting out, like who's should be thinking about this, and how could you go from, how do you get started? Let's say as an individual, I guess you teach a little bit else in your academy. So I want, if you've never heard this, Joe and his company can teach it to you, but
Yes.
How does that work? Can somebody that's, doesn't have a business, but doesn't want to, be in the landlord business, but they want to build another type of asset class in the real estate asset class, and generate cash flow? How do you start thinking about that? And what is like step one?
Yeah. The pioneers in self-storage had land and they had an idea, and maybe they were builders themselves or handy, or, they were friends with builders, and they poured concrete pads and they threw up a building of storage and it rented out. And then they were like, hey, that worked. And they threw up another one. This is a classic story I hear all the time from sellers. I don't recommend you do that. Okay. I don't recommend you start that way. That is very speculative and risky. What we have found is the husband and wife team, or the you don't have to be husband and wife. You can be whoever you are, but someone who's looking for something better, a better way. The way I've always been my entire life. Even when I had a W-2 job, I was bartending 2 nights, and I was out on weekends, Saturday and Sunday, looking for houses to rehab and flip, or rehab and rent, whatever. So it's those people looking for a better way, more cash flow, to start to accumulate cash flow, one facility at a time, to the point where it first equals their W-2 income,
right,
and then exceeds it to the point where they can quit their job. Those folks, I highly recommend, if that's what you're looking for, that's who comes to us.
Yes.
They come to our academy. We teach that, we show them the way of the business, and then we offer a mentorship program to them.
Okay.
And if it's for you, great. If it's not for you, understood. But what I don't recommend is that you go out and try to do this on your own. Even if you're a successful multifamily, I had a conversation with a guy yesterday, successful multifamily guy. In 15 minutes, he knew he should not do this on his own. He knew 80% of what he needed to know. He was starting on third base, but it was that last leg. You really don't want to go do this on your own, and because it's a business, it's an operating business. There's lingo, there's jargon, there's things you need to understand about a facility in a market, because remember, storage is local too. We have to understand the 1, 3, and 5 mile market, or 15-minute drive time around us. We have to understand the demographics of what's going on. Is this a good purchase or not? Is this well run? Is this a well-run facility or not? Are we in an oversupplied market or not? Is the population increasing or decreasing? Can I raise rates here? Because ultimately what we want to do is buy something. And the way that that is we think is poorly mismanaged, and sometimes it's very obvious that it's poorly mismanaged. Like there's no website, for instance. Right? Classic example: we take over a facility from a seller. Regardless of the condition we found it, you can find it on your cell phone, rent a unit on your cell phone, pay for it on your cell phone, and insure that unit and the contents of that unit on your cell phone. Right? That's what you within a week of us taking over. That's we just brought into the 21st century. We know that will impact that business, and we know we will be able to grow rates that way because now we're marketing for that facility. We're discoverable. That's how people find us.
Right.
Find facilities.
Right. Exactly.
Right. So, but the idea is to take the NOI, the net operating income that we purchased, the as is net cash flow of the facility, and grow it. And as we grow it and slap a cap rate on it, which is just a multiplier, right? Because that's how these things are traded. That's how we're growing value of the facility. But also along the way, we're growing the cash flow. And it's the growth of the cash flow that increases the value. So it's really a 2-for-1. If you're interested in if you've got money in not necessarily although you could take an IRA and do this,
right?
Self-directed. But if you've got cash, or if you've got money in a whole life policy,
there you go.
You can pull it out of the policy as a down payment, and now you're earning interest on your side of the equation, Curtis.
Come
right?
on. We're talking my language now. Come on.
Right. That's your down payment. That's now it's still earning with Curtis. Now you put it down on a facility, right? And now you've bought some cash flow, and you're going to grow that cash flow. And the successful people that come to us, we're teaching them how to do that. And then they're doing once you know how to do it, you go do it again.
Right.
And then you do it again. And before you know it, you've got decisions to make. Do I want to keep working? By the way, some people do. Some people love what they do. We have doctors that come to us. They're not going to stop being a doctor. That's a passion, right? They love what they do. There's dentists that definitely quit because not every dentist loves what they do. But just to give you an example of someone that you don't have to quit what you do. It's just about wanting to, or finding a better way, or creating more cash flow so you can do other things or more things. We got a truck driver who's in the business. Teacher. People who are great teachers love teaching. That doesn't mean you have to quit being a teacher. If you've built up, a nest egg and you want to buy a storage facility. And you know what else I love? This is one of the best things. And thank you for allowing us to get this message out. What most people don't realize is, and I came through the same way. And by the way, we didn't have podcasts, so thank you for that too. I was driving around my car, listening to nothing, looking for deals, and I wish I could have listened to you. When I was 30 years old, 20 something years ago, trying to create something. Most of us, we all know residential real estate because it's on TV and we're related to somebody who's flipped a house or has an Airbnb now or whatever, right? It's in our face everywhere. We all set out to do that because that's the only thing we think we can do. We can actually, anyone listening can go buy a self-storage facility using an SBA loan. Because it's a business. You can't buy a multifamily property with an SBA loan. So that's an advantage that we have. What does that mean? Well, that means if I'm looking at a $500,000 multifamily property or a $500,000 self-storage facility, the multifamily property, I'm going to need to put down 25%. Is that fair?
Yep.
125 grand. Self-storage facility, I can put down 10%.
That's what I was thinking, 10%. And then SBA will let you put down 10%. So that's like 50 grand.
That's 50. So there's $75,000 more dollars I didn't have to put into the property.
It's funny. I got lots of people with 50K in their whole life policies, that. And so, because one of the reasons, Joe, I wanted you on, I try to show people, look, you got to save, right? You got to capitalize, and then you got to begin to look for assets. What's an asset? Something puts money in your pocket that, so if you're earning like 3-4% in the policy, then if you see an opportunity, you're supposed to, collateralize that, go buy that asset. So, because really, if you do it the way we just said it, it's infinite return, right? Because you borrowed
Yes.
the insurance company's money and you're getting the SBA money. And, so now you got to look at your numbers. And as long as you are generating enough revenue to pay both parties back, boom,
Yes.
and you go wash, rinse, and repeat. Joe, I tell people, look, there's 4 asset classes, right? Business, real estate, paper, and commodities. This is intersecting with 2 of business and real estate, right? And then we say there's 3 rules of investing. Invest in what you know, or in your case, with invest in knowing. With the Belrose Group, you got to invest in knowing. Then you invest
not with us. Invest in yourself. Come to an academy. So invest in what you know. I agree with. Come get to know it. We'll teach you it. And now you'll know.
I said, thanks for clarification. Because so your number one, you got to invest in your number one asset is you, right?
Yes.
So what do you invest in? Mindset, skill set, network, right? And now you know how to do it. Because I told people, look, all I want you to do is, if you see something you like and you understand, you have the capital to do it, right?
You know what I love about what you just said? Mindset, skill set, network. If you bring the right mindset to us, we will give you the skill set and you're a part of our network. I've never heard those 3 together and I love it. But that's exactly, you nailed it, Curtis. That is maybe one of the best summations I've ever heard of what it takes to be an entrepreneur, or forget entrepreneur. That sounds like a big label for some people who maybe have a day job or a side hustle, someone with a why who's just looking for more, who's got a mindset that wants more, right? And a desire. That was amazing. I love that.
Yeah, that's the key. And so you gotta, if you're hearing this, you're going, I never heard of this before. I think I like this. Now you got a clue, because there's our theme of our show, outside teach people how to be the bank and what we call principles-based financial planning, is wealth outside of Wall Street. Okay. And here is something that you can do. So, and you say, well, look, all right, what's your goal? Well, I want 10 grand a month. My bills are $6 grand a month. It's not rich. You're not trying to be on with a yacht and that kind of stuff. That your first step is financial freedom, right?
Yep.
You're out there, right? You got passive income equal to or greater your expenses. Like I told you, I'm not a wealth manager, right? You have to create wealth. That's your job as an entrepreneur, but we can get you towards financial freedom, but then you have to get better, stay in the game, and you keep doing what you're doing. People think, in Rich Dad's Guide to Investing said it's a formula. Like, it's very boring. Like, we're looking for like trading places, and you see on CNBC and stuff, they try to make it exciting with sound effects and whatever. It's not.
We have a saying, we're in the crock pot business, not the microwave business.
I love that.
Yeah.
Elaborate on that.
You're not going to get rich overnight. There are stories, and we've even had some crazy successes. We've acquired 20 facilities, and we got lucky on a couple that blew the doors off the returns. When we ended up selling it, that's not how we underwrite. It's not how we get into the business. When you step up to the plate to try to hit a single, sometimes you connect and hit a home run, but that's not the objective. The objective is, let's see if we can hit a single, maybe a double if we're at the plate a lot, looking at a lot of pitches, right? But a single is just fine because we can stretch a single into a double into a triple.
Right.
And you know what? You can live off doubles the rest of your life.
I love that. That is so. I mean, I'm thinking, like, what is the capital needed? But the thing is, if depending on what you see, you could get an SBA loan. You could get There's another thing. I work with laundromat owners, and you could get a loan from sometimes a 401k to buy certain types of businesses. Like, I don't love them, but it's wherever your capital is. Wherever you have the most capital. What you want to do is just look for things, but because I think, see, what people miss is the financial plan. What do you want and why precedes the business plan, right? So you got to kind of figure what's your mindset. Are you willing to do the work? Are you willing to learn? Then, okay, now you've heard this. Okay, I want to grow let me research this as a possible avenue. Does this fit my buy box or my, what's I had a Garrett Gardner calls your investor DNA. And if it does, then you need to go in and go to work, right? Because a lot of people I want multiple streams of income. Well, you got to get one.
Yep. And by the way, once you get one, it's like crack. You got to have another one.
Right.
I shouldn't say that because I don't know that.
Right.
But it's contagious. It's addictive.
Right. Yeah.
Right. I'm a deal junkie now.
Yeah.
And I have to control myself and not look at every deal because they're shiny objects. Right.
Yeah.
But I'm also stepping up to the plate a lot, and I'm seeing and I'm involved and I immerse myself in it. So I know what's going on. And that is what led to the derivatives. I didn't even finish them. There's boat and RV storage. There's industrial outdoor storage. We have a facility where it's up by Fort Drum up in New York, where we call it like an auto valet storage. So we're storing cars in a warehouse, and we turn them on and we drive them around, especially in the winter. Excuse me. Once a week, once a month, whatever the frequency is, for the troops who are deployed.
Okay. Wow.
For the cars for the engine blocks. So there are, we have almost purchased, we've gotten close to purchasing other scenarios where they're like auto valet storage, where they're just parking cars like such. There are so many different ways to skin the cat in storage, but you got to get in it. And that's why I say self-storage may be what brought you into it, but you'll find your niche within it. And you might do multiple things. We've got storage facilities that are iOS, boat and RV, and storage all in one.
Wow.
And they're cash cows. Absolutely cash cows.
That's fascinating. What I know you have a hard stop. Is anything I didn't ask you that you want to say, or that that I missed? Other than I want you to tell them after that. Then tell them where to find you. But I want you to make sure I'm not missing anything.
Yeah. No. I mean, what's funny is you hit the major points. Why should you get involved? How should you get involved? But we think so much alike from a cash flow perspective. I think this is why it just the ahas were obvious ahas.
Right.
So
I'm excited. I'm like, all right, when's this next academy? I need to be.
In fact, Curtis, I wish I had met someone like you 15, 20 years ago and started infinite banking then, because I could be doing personally so much more than I'm doing today. Mm-hmm. I missed out on all those years. So if you're listening to Curtis and you haven't done anything yet, my goodness, please don't make the mistake I did. Start early. I'm 51. I wish I started 20 years ago. Even if you start small, it's amazing what can build up to. And even if you're thinking, I'm not ready yet, I'm 5 years away. Well, that's exactly why you should start with Curtis today. Right. Because if you want to be 5 years away or 3 years away from making a major move like self-storage or some other asset class to add to your cash flow, you need to start with Curtis now so that you can start to build up that nest egg, even if it's small. But what didn't we cover? Well, the one thing I will say, not only is do we have the advantage because of SBA, this is probably the single best time to get into storage. And I say that because we buy trailing 12s. What does that mean? We're buying in the financial industry, there's a saying, past performance is no guarantee of future results. Yeah. In our industry, past performance is what we're paying for. Okay. So if your last 12 months weren't great, that's your problem, not mine. I can't pay you for what it can do, because I'm going to do that. I can only pay you for what you're demonstrating you've done for the last 12 months. So the last 12 months for most storage facilities, not great. We came through the last 2 years, which the last 12 months is part of. We just came through probably a valley when you're looking at storage. Is it recession-proof, like you said in the beginning? Absolutely. Are our highs as high as some of the other asset classes? Maybe not, although we do really well. Mm-hmm. What really sets storage apart is our lows are not nearly as bad as some of the other asset classes, right? But even then, we can still find them. And we just found them the last 2 years. So if you're interested in, if anything I've said is moving you at all, please email me and I'll introduce you to the folks over at the Academy and we'll get you set up. But now would be the time. If you have cash, if you have been working with Curtis and build up a nest egg and you're not sure what to do, now would be the time because you're buying storage on sale. It's on sale across the country. Even though we're a local business, 135, in most markets, it was still down. Like across the board, we were still down. So, and you're buying at interest rates that are 6+. If you go SBA, you're in the low 8s, high 7s.
Right.
They're only going to come down. I'm not telling you they're going to come swiftly down, but they're not going up over the next several years. No one is predicting that. If anything, they're predicting not going anywhere to slightly down. If they come down a little bit, you've just enhanced the value of your facility. All right. So now is the time you're buying.
Plus, you got fixed debt and as you become a better operator, you're growing your cash flow. So your net operating income is going to increase just over time if you're patient.
And likely, so whether you go SBA or not, we refi. Well, if you don't go SBA, we refi every 5 years. But even inside of SBA, the not to get complicated, it's 2 loans. Mm-hmm. To you, it's 1 loan, but on the back end, it's really 2 loans. The second one is fixed. The first one you do have to refi every 5. Those rates can come down. So if you're buying at, take SBA out of the equation. If you're buying at 6.5% on a conventional loan today, and you're buying a what I would say is a discounted NOI, if you do what we teach you to do, we're going to grow your NOI, grow your cash flow. And when you go to refi, you're likely refining at a lower interest rate.
Wow.
That's the scenario you want to be in. Mm-hmm. Right? If you're 6.5 today, what are you 5 years from now? 6.25, 6 maybe?
Which improves your
We don't know, no crystal ball, but probably not more than 6.5.
Right.
So there's a decent chance that you're actually going to compound your growth and your value there. And then what do you do there? You can refi and pull money out, or you could sell it. Some folks will sell it because they created $300,000, $400,000, $500,000 of value off of a $100,000, $200,000 investment. They've created this, 2x value in 5 years, and then they'll go buy something bigger with more cash flow.
Mm-hmm. So similar to the apartment building play here.
Buy another one.
Yeah, I love that. All right, my head is about to explode now, Joe. I tell them how to
you reach me. Email is the best way. Joe@belroseam.com. I'll spell it. It's BEL, so just 1 L. BELROSE. A is an asset, M is in management.com.
And then from there, so who should be reaching out? People that wants to learn this game. Do you have opportunities for them to work? I don't know the term.
So here's who emails. People that said, hey, I heard you on a podcast. I'd like to learn self-storage. Great. I'll hook you up with Scott Meyer's team at SSI.
Yep.
They'll make arrangements with you. We do an academy once a quarter. So actually next week we're in Seattle. In November, we're in St. Augustine. I think Phoenix maybe after that, and Orlando, or I don't know. Those are, typically I think going to be Phoenix and Orlando for the most part. If the other emails I get are, hey, I have land and I was thinking about, and it's zoned this, and I was thinking about building self-storage. Let's run it out. Let's take a look. We'd love to help you with that. Most of the time it doesn't make sense. But give me a call. And the reason I say it doesn't make sense most of the time, sometimes there's too much self-storage in the market already. It's too saturated, or the rates in your market sometimes aren't sufficient enough as a market rate to justify the cost of development. But that's we can turn that around very quickly and say, all right, we just need your location and your acreage. And we can tell you, yeah, this is going to work. It's not going to work. If it works, then we just have further conversations about how we can structure a deal together. Okay.
So, guys, listen, this has been phenomenal. You need to listen to this more than once. And then you need to, if this is intriguing, we're going to put his email in the show notes. You should do some research. If they get on your list, will they get emailed out when the academies are?
Well, I'll make a personal introduction to
the people.
Contact over the academy, and then I'll step away from it. I'll let them handle it from there.
Okay.
I can be involved if there are further questions. So I don't get the wrong impression.
Right.
Here's a resource.
But the training company is not you. That's
that's
Right.
They'll handle the logistics and the details of that. Yeah. Any other follow-up questions? Is it worth it? Can we talk? Yeah, sure. Of course.
Yeah. It sounds like a fascinating opportunity. I am so glad I met you. We have to have a coffee one day because we're literally right down the road from each other location wise. So when he's in town, guys, listen, I'm excited. Check the show notes, listen to the share. If you know somebody that, wow, I think I like this, or they should hear this, forward it to them, do them a favor. And you could open them up. I hopefully I've opened your eyes up, because I've seen it, but I didn't know how it works. I didn't realize it was so, should I say easy to get into, or
there's lower barriers to entry than you think.
Okay.
Yeah.
So there you go. That's what you want. And AI can't affect.
Not in a negative way, only in a positive way. We're actually using AI to enhance what we're doing.
There you go. See, so that's what you want. You got to be on the right side of the game.
AI can't store anybody's stuff.
That's right. Right. And so that's it. You gotta you just gotta keep looking, and so our 3 rules of investing: invest in what you know, invest in what you could control, don't chase returns. Yep. So we've already hit 2 of those on the call today. Joe, thank you so much for being on the Practical Wealth Show. Guys, go out there and make it a profitable day.